Thanks for tuning into Bloomberg Quint. My name is Neeraj Shah and I am at the IIM Ahmedabad, or the Indian Institute of Management Ahmedabad, wherein under the umbrella of the Red Brick Summit, Motilal Oswal Asset Management has asked 60 B schools to submit their stock pitch, essentially one stock idea that will give great returns over the next 3 to 5 years. 60 teams, 10 finalists, each of them presenting the best stock idea. Come in. Well, now that we are here, let's try and find out from the three wise men who are going to be judging these teams about what is it that they expect from this event. Ramdev, Sandeep, Rajiv, thank you so much for being here today. And just want to understand what is it that you are anticipating today from this event, and how is it that you'll be judging these students? Ramdev, can I start off with you?
It's a very exciting day, when I was kid and I had passed out CA and want to come in stock market. I don't know from where to start. That time, because being chartered accountant, I started reading balance sheets, and that gave me some kind of solidity into looking into the value of the company. And then of course you had the price. So slowly, with all the mistakes you learn, and then with all the research, after 30 years we found investment philosophy called Q.G.L.P, quality, growth, longevity, reasonable price. So that became my framework. I wish somebody had given me that kind of writing, or Buffett in 1985, his writings and all. So this is also inspired by Buffett's lot of learnings from Buffett and Peter Lynch and all. So I think we want to see, at least I want to see how kids are getting it, because it's just about starting point. It's not that everybody will follow Q.G.L.P in perfect sense. It is my way. Yeah. So they'll find their way, but from where to start? So this will be a good start. So let me see what kind of passion they have.
Yeah, it's interesting you bringing this event and taking it to the schools as well. Sandeep, your thoughts, and how would, you as an investor approach investing, and what is it that you would expect these students to showcase which will stand out for you?
So the key would be, these are 10 out of numerous entries which have come. So they have come a long way. They've already been sort of filtered to be the top 10 out of all the MBA institutes. So to me, the focus would be to see what process have they followed. Have they understood the key drivers? How they think about valuation, just the framework. I know they are young students, they don't have practical experience, but just how they have gone about it, and is there a process? Is there a method which they have followed, whether Q.G.L.P, their own, and how have they arrived at the conclusion? So to me, the process would be most important to think about, whether they have potential to be investors, how passionate they are.
Rajiv, I was listening to you to speak to some students and telling them about you wanting to understand their thought process and not too many other things, because you wouldn't know about some of the companies that they're going to be talking about.
Sure.
What is it that you anticipate?
Sure. So when I signed on for being part of the jury, I was not sure what to expect. But the 10 presentations that have come in advance are of a really high standard, high quality.
Okay.
So the sessions will be all about knowing whether they have understood the matter or whether they have collected them topics or from sell-side research reports or magazine articles and collated it together. So my deep dive will be in terms of how are they thinking and whether they have understood the thing, because the presentations will look of a professional quality. They're that good.
Okay. So Ramdev, just very quickly, you had a chance, and all of you had a chance to speak to the teams yesterday as well after the event and in the dinner. Were there sparks of promise which would prompt a veteran investor like you or any of you to think that these guys have really made presentations which would prompt you to maybe invest in those companies?
Yeah, so investing is, a lot of ideas are already there in our portfolios, so because it's Q.G.L.P, ultimately you don't have too many Q.G.L.P ideas.
Yeah.
So some of them are already finding into at least my portfolio.
Interesting.
So that's not, so in fact I want to get better educated, because these kids are very smart. And as he said, presentations are very polished. In fact, one or two presentations are world class. In the sense, I have not seen that quality of presentation. In fact, I met and I was asking him, have you worked in the company? Where have you worked?
Right.
So I think he's trained in Goldman Sachs or somewhere on presentation only.
Interesting.
So I think but then presentations are one thing. In investing, have you understood the what is a value driver, and how do you differentiate between value and price, and how passionately they have thought through about the company. So all the 10 times, those 15 minutes, 20 minutes they get for the pitches, that will be. In fact, I was telling them, make a very, do your mocks
Passionate
and make a passionate pitch so that we can see the difference between you and others.
Yeah, okay. Let's head then. They are waiting to make the presentations, and I'm looking forward to, as well as you guys, to hear those presentations. So let's go.
Chalo.
Well, we're at the end of the Think Equity Think Q.G.L.P contest right here at IIM Ahmedabad. And the three judges with me, you guys have announced the winners, you guys have gone through the presentation, I went through the presentations as well, and I have a bunch of thoughts. But let me start off with what you thought of the kind of presentations that they made, and how is it that you decided on choosing the winners that you did? Ramdev?
Yeah, so the process was well set. That QGLP, all these 5 things, that presentation. So basically, it was 10 marks each for each of the verticals, and so 50 marks. So in that, who got how many, and then we ranked our own the same mark system, and then within ranks, who got the least, he becomes the winner.
Okay.
So that's how we went about it. It's not a very complicated process,
Right.
but there was no fight. All three, combined, it turned out to be same. So there was no negotiation or anything like that.
Okay.
So it was a consensus kind of judgment, and we are pretty happy that who all won. But I think the real fun was the quality of presentations. This is just the second year, and last year was kind of disappointing in terms of understanding of the idea. I thought whether anybody understands at all. Is it that complicated? That's what I was thinking. But this year, I'm surprised that in 1 year, I think what happened was that in individual colleges, they had their own internal competition of 8-10 teams to be nominated from there to top 60. And that actually improved the quality. So it's very encouraging that all of them, they understood the very concept of QGL, and they presented very well.
Yeah, interesting. Sandeep, you and I both don't have the liberty of doing a relative comparison of what happened the last time and this time around. But when you came in, did you anticipate the level of depth that was exhibited here, or would you have hoped for more, or would you have anticipated a lot less depth, whether in presentation or in the thought process or in the stock pitch overall?
So it was amazing. I think all the stock pitches were very, very good. At the end of the day, they are undergraduates, they are in the premier MBA institutes, you wouldn't expect any less. So I think it was I really thoroughly enjoyed all the pitches, and I think a lot of hard work has been put in, and overall it was very, very encouraging to see youngsters passionate about investing and presenting.
Yeah, I think that's what comes out, right, Rajiv? I mean, the passion for investing. Now, somebody's logic might be different than what your or Ramdev or Sandeep's logic might be, or what anybody else's logic might be, but the passion with which a lot of these guys or a lot of these students presented their case was quite commendable.
Passion, and more importantly, they at least got the framework right broadly.
Yeah, which was anyways given. Yeah.
All of us had this thing that maybe on the valuation front, a lot of people slipped up, but at least in terms of identifying quality businesses, identifying growth prospects, identifying the longevity of growth, those kind of things, they got it right. Now, valuation, of course, is not just science, it's art plus science, and sometimes it takes a lifetime to get it right. So, probably we are expecting too much from people who are yet to complete their management education, but it was quite encouraging in that.
Actually, comment on this, both of you, I heard mention this, that on the valuation front, there was a bit to be desired. Why did you think that? I mean, you thought that the selection of stocks, maybe the peer set offered better valuation within the listed space and the kids could have done that, or what is the reason for this?
No, it's not about the stock they picked, and this is an evolving sort of process that what is a business worth? And as Rajiv said, that it takes lifetime to sometimes understand what is it worth. So in general, we will do relative, we will do historic valuation and arrive at, okay, this is the growth, this is the multiple. And it's a beginning. They are still students. They are coming, and for me personally also, it's a journey. You try to evolve. So that's what, and we are all financial analysts to start with and not business experts. So having a better grip on what is the value of the business as we begin that journey. So as he mentioned, you're being too harsh that expect valuation to be sort of very good, but if they work towards that, they become much better when they come into the real world sort of thing.
Interesting. Ramdev, one aspect of the 10 presentations, the 10 finalists, was that they were not necessarily the nifty 50 names. There were a lot of mid-cap ideas presented as well, and we just showed that the students were not just looking at the top 50 or the top 75 stocks, but cast a wider net and then chose, which is always an encouraging side, right? Because India is a story of small companies becoming larger. Was that encouraging, and was this similar to what happened the last time as well?
In fact, we wanted to see even more of that. See, because large Q.G.L.P ideas, they are in our portfolios, they are known, it's very well known that these are the very good companies. So again, trumpeting the same companies in this kind of this thing. So, and second is the very popular names, but exorbitantly valued because it's fully discounted by the market. So yes, it is a Q.G.L idea, for sure it is Q.G.L idea, but is the P there? Because for great investment, for a great company to be a great investment, the real differentiator is the purchase price you have. True. So that's the promise of Q.G.L.P, that not only you buy a quality growth company, but you also buy at reasonable price. That's the discipline that the students must understand. And so having a growth insight, and that growth insight to be converted, what price you give, that's the basically, the tying point. True. In this thing. And there, I mean, the guys who got the award, obviously they had done that job better. But yes, I mean, we saw, I mean, of the 3 awards, actually the first one which went to Ahmedabad, it was about a small company, small bank, DCB, and the third prize, which was Jamna Auto, that is also a kind of mid-cap idea, less than $1 billion. Only Maruti, which is, the presentation was outstanding, and the quality of franchise is very high, and he presented very well. So he got that idea. So 2 out of 3 ideas were kind of smaller ideas.
Yeah, actually, you preempted my question. I was going to ask all 3 of you, and any of you can come in. What prompted you guys to converge upon the first name, which is DCB Bank? Surely it was not necessarily only the quality of the stock that led to this. I mean, what about the thinking process stood out? Any of you?
It's the whole process. Understanding of the bank, how the business is driven, tying it up with the model which they had, and overall sort of the overall understanding of the whole thing was definitely the best, and hence it was a convergence of.
Interesting.
So
Rajiv, you want to add
banking
to
may
that?
be sometimes tough for people to understand, saying as the balance sheet grows, there's a certain amount of regulatory capital required, which requires issuance of fresh equity shares, which dilutes the equity. How does return on asset, operating costs, how do all those tie up in return on equity? What are the levers? So a DuPont analysis for a manufacturing company is very different from the breakup that you do for a bank. So the team got some of these nuances right, and they were able to create a good framework for the analysis of
well, if the current market scenario is to be believed, it's tough for even experienced hands to figure out how to value NBFCs. But the second one, and I thought that was a difficult one, simply because actually I thought even HDFC AMC was a difficult presentation to make, because you guys are clearly the masters of the game, and for them to try and make a pitch to you was a difficult one. But Maruti, Ramdev, you track that company as well as probably anybody does. What stood out in that presentation for you specifically? Because I've heard you talk about Maruti so many times.
So actually it was the perfect presentation. If you see the pitch which they sent it to us, and then the way they presented, both sides, it was perfect. They understood the idea, they understood the competitive position, not only in India but in the world. In fact, some of the ideas, some of the slides were new to me also. That in Korea, this Hyundai plus Kia, they're about 70%. So, always you ask question in this country which is going to be a very large car market, this is second largest car market going to be. In that, how can Maruti country with 50% market share. Even in Japan, which is very large car market, 30% is ruled by Toyota. So, I mean, those are things which you come to know about. Then the expansion, how exactly they are going to sell 5 million in 2030. So, I think they had understood, they clearly understood the quality, but they also understood what it takes from here to deliver the growth which they themselves are planning 5 million by 2030. So I think it was a very intense discussion of a global possibility and the disruptive things like say EV coming in. So how exactly, how well they are prepared in EV and what is the battery plant. So I think every aspect of it was covered, and now with the correction, the stock price was also looking much more attractive. So all those things played. So it was a good idea, QGL idea for sure, and the price also looked attractive. So they tied it very well in presenting. It's not about idea. I mean, this is not about a stock tip.
Of course.
It is about
pitch.
that pitch. I mean, are they convinced? Have they understood the process? That P is important apart from QGL. So that I mean, everything fell together.
Okay, and I'll be doing disservice if we don't talk about the third place team as well, because there was very little differentiating all the three teams. Interesting that a mid-cap auto ancillary company catering to the CV space found its way to your favorite books as well. What stood out in the third presentation? Any of you again?
So, I mean, one of the things was that they still dominate with 75% share. So though it is slightly cyclical in the sense that CV cycle. So we asked those questions whether, I mean, what happens to the CV cyclicality, and we should not be valuing it too high. So, the team was very clear that they are going from, say, OEMs to the after-sales market, and which is very large. And I think I learned from that presentation that the suspension's life is not very long. So, so I mean, you pick up something, which you didn't know.
Literally going back to school.
Yeah. So, like there must be a huge unorganized market, unorganized and after-sales market, and that they are tapping. So, what happens, that only time will tell. But I mean, at least they picked up these insights, this insights about the future or the quality of business. That is what really makes a difference in a pitch.
Yeah, I guess so. Anyways, gentlemen, it was a pleasure spending the day with you and seeing you judge all of those presentations. Thanks so much, and thanks so much for being on the show as well.
We are pleased to say we have the winners of the second Motilal Oswal Think Equity, Think Q.G.L.P contest. So we start with the second runner-up with a prize money of 150,000 rupees. Goes to Team IIM Bangalore. The first runner-up who win a prize money of 300,000 rupees. Team JBIMS. And the winner of the second Motilal Oswal Think Equity, Think Q.G.L.P contest, IIM Ahmedabad.
Well, now with the winners of the coveted Think Q.G.L.P contest and teams from IIM Bangalore, IIM Ahmedabad, as well as Jamnala Bajaj Institute of Management Studies. And congratulations to all of you. In fact, to all the participants, because you guys were the 10 shortlisted teams out of 60, so which in itself is commendable. But then to make a presentation and impress the judges was quite commendable. I was thoroughly impressed with the presentations that you guys had made as well. Team Bangalore, let me start off with you. What drives you to equity markets in a nutshell? Why did you guys choose to make a presentation on a stock right now? I'm guessing you want to make a career in equity markets. What drives you to this? Very quickly.
So what drives us to equity market and why we chose this stock basically was because equity is all about betting on a business. It's all about where the value is coming from, and if you want to bet on a business and you want to actually own a business and also gain from the capital appreciation, there is no other instrument in the world better than equity. And if you look at the historical returns as well, it's consistently beating the inflation and all other forms of other asset classes as well. So that's why we think it's very attractive, and it's going to be very attractive as well.
Okay. Team JBIMS, I mean, is there a particular reason why you guys are attracted to equity markets? You can do it passively as well, right? Invest in funds, funds give good returns. Do you guys want to be active managers or active investors?
So yeah, most definitely. I think personally for me, equity market started more as a book thing, but then luckily like I got more into it as I went to my MBA. Then again by virtue of getting an internship into it, every step that I took towards equity market, it just made me more passionate about it. And fortunately for the three of us, all of us being equally passionate about equity markets, got like gelled us together, made us a team, and here we are now.
Interesting. What about you guys? I'm Ahmedabad, the hosts. I mean, is this something that you want to do in your career as well? Be into equities?
Absolutely. I think both of us are extremely fascinated by the equity markets. Both of us happen to be chartered accountants and have been following the markets for a long time. I think the ability to gain supernormal returns by betting on stocks and the ability to differentiate yourself from anybody else who's betting their money on the market is something that attracts us to the market.
Okay, so why did you guys choose DCB Bank as your stock?
I think we started off by selecting a sector, and within the sector, we then rounded down upon DCB Bank simply because of the kind of loans that it caters to. DCB Bank is more focused towards self-employed and MSME, and we see that there's an ocean of growth lying before the country in terms of the structural stage at which we are in. So that's the reason broadly why we chose DCB Bank. And as far as the specific goes,
yeah, but why DCB Bank over some of the others?
Some of the criteria which we held were, one was a sound management. What we studied about Murali Natarajan and the entire team was that they have been able to transform the bank over the decade. Moreover, some of the key criteria were the growth should be very strong. And we noticed that DCB Bank has around about 25% growth over the past 5 years. One more thing was asset quality, something which all the banks are bleeding with. So over here also they have been able to maintain a very structural sound book in terms of less than 2 gross NP ratios. And with the recent correction in prices, I think so this was a little undervalued, and this made the best fit in terms of the entire model in which we had to present the stock pitch. So that is why I think so we selected DCB Bank.
Interesting. A relatively easier choice, if you will, could be Maruti because it's a market leader, but it's always a difficult call to make because of the valuations. When you guys chose Maruti, it was not at 7,300. It was a much more expensive stock. How did you guys boil down upon Maruti compared to a lot of other names that are available in that space?
When we started with the Q.G.L.P framework, we actually studied the framework first, and when we looked at Q.G.L.P, it was an intuitive choice that we chose Maruti, and we always knew that it being a large cap, it will always be difficult to justify that price that we would have for a 25% CAGR over 3 years. So the base is larger and you will have to justify that. But when we looked at QGNL, so it was just an intuitive thing that Maruti being a market leader all throughout and being dominant in its space, we felt that we had a lot to understand about the business and then deep dive into what Maruti is as a company. So that is where we felt that picking Maruti would challenge our limits, and basically justifying the price that we had there is something that would be challenging and something that excited us. So which is why we chose Maruti.
Interesting. And I'm going to come back to you guys as a final set of questions about what does winning a contest like this, because all three teams of you are winners, what does winning a contest like this mean for each of you? But before that, Team Bangalore, an interesting choice of stock, Jamna Auto. The stock has done really well, but the CV cycle, a lot of people talk about it tapering off now. How is it that you guys decided to boil down on Jamna Auto specifically?
So this time we took a pretty different approach to selecting the stock. Instead of going by industry to stock, we actually looked at the stock first. We took a bottom-up approach. We first looked at the company is quite strong in terms of market position. They have around 72% of market share in what they do. And then once we were confirmed about the company has a very solid market position right now, we looked at the industry parameters about what can fuel its further growth. And we found out that yes, the CV has a cyclicity, the commercial vehicle has a cyclicity, but if you look at the operational parameters of this company, the way they are taking it forward, the way they are taking the break-even point to quite low of 33%, the way they are trying to diversify their revenue sources from different sources so as to compensate for this CV growth, I think that was a gem that we found out. And I personally hold this stock, so we thought it's better not to take any other stock and pitch for it, because we were quite
all of you stock investors, individual investors in your own right? Oh, which is you're not allowed, or are you as well?
No, actually none of us are.
Okay, but the other five are. Okay, but that's a great thing to know. The equity cult in India, as we say, has truly taken shape and form. What does winning a contest like this mean for each of you? And Team Bangalore, if I can come to you, I mean, winning this contest, presenting in front of the guests, speaking to media as well. I mean, it's not a terribly old age. You guys are very young people, and winning a contest like this, what does it mean for you? If I can start off with you as a team.
So, firstly, it's very overwhelming. I mean, it's sort of a first for me, and I think for our team as well. So, a lot of us are stock investors, and I mean, we do come across good stock ideas now and then. But due to academic rigor, a lot of time what happens is we do get the idea, but we don't get the time to pursue that. I think, but this has given us a good opportunity to do research in the respective industry and then arrive at a stock through a structured approach. And we personally, all of us feel that Q.G.L.P framework would help us in further investing.
Yep, I guess that's well said. Team General Bajaj, what does winning a contest like this, becoming runners-up, mean for you guys as a team? Will this propel you to start investing yourself?
Yes, we think it would definitely propel us to start investing. So when it started, we didn't have a clue like where we would proceed and how we would go about it. But then talking to our faculty, talking to our friends who are investing right now, it gave us quite a knowledge in depth as to how we should go about it. And then we started reading the annual reports and all. And then we realized that equity investing is not only limited to investing. Once you start deep dwelling into the company, you actually start getting connected to it. And there is where the essence of investing in equity lies, like understanding the value of the company. And once you are done through that, then a lot of things get clear. And then, yeah. So it has been a great learning experience. And we, all three of us, I should say,
for all
investors.
three of us. Since we are not investing right now, I think this gives us some sort of boost to join in the markets now. It gives us some sort of confidence.
Yes.
Interesting. Yeah, but do keep in mind that to spare enough time if you are going to be directly investing yourself, as there are other vehicles available if you have another jobs and can't do this full time. But final question, and IMA, what's the key takeaway out of winning such a contest mean for you guys?
I think it's been a wonderful opportunity because it grants a validation to the investment philosophy that we have. Each of us are personally invested in the stock that we've pitched. And apart from the fact that we've done a host of valuation while we were in college at IMA, the pitch gives us an opportunity to understand the business by talking to the management, conducting on-field visits, and that's what we've done. And apart from that, being judged by Mr. Ramdev Agarwal himself, rubbing shoulders with the finest fund managers of the country, gives us an invaluable opportunity to understand where we went wrong and improve our investment philosophy going forward.
Well, maybe you guys might go wrong in the future, but for now, today, all of you guys have gone right. So, big round of applause to all of you, and congratulations for winning this contest. And viewers, that brings us to the end of this coverage. Thanks so much for tuning in to Bloomberg Quint.